Hi, this is Mike for emini Underground, and today is the 19th of January 2012. Our chart's kind of interesting today. We kind of got an opportunity to take a look at the differences between some of these new profit targets that we've been, toying around with and testing, not trading yet until we decide that we have enough data to make a go of it. But let's start with our regular everyday rules. Following those, we had a 3-point winner here in the morning. We had a 1-point winner, and then we're stopped back out at break even here. And we likewise had the same type of trade later on in the afternoon, about 2:30 to 3 o'clock market time. So, what are these other numbers? What's this minus 1.75? What the heck is this green and red line? I've been playing around with testing this trailing stop. It's really one of the nicer trailing stops that I've seen. It's at emini-watch.com. Barry over there put this together. It's completely free to download. I would recommend going over and taking a look at his site. It's really quite a good site. But I'm not really a huge fan of trailing stops, and frankly, he has said that he's not a huge fan of trailing stops either. The reason being, if you're using a trailing stop for your exit rather than a target for your exits, it gives the market too much time to retrace back, and you're giving away a ton of your profits. And really, through some pretty basic modeling, you can see, there's been moves over the last couple of weeks of, actual trades, not just move size that we could have got in of 6 points, 7 points, 8 points, 11 points. But all that said, if you were to take a target of 3 points, you would be more profitable. And the reason for that is if you're waiting for 4 points, 5 points, 6 points before you take your targets off, you're only hitting that on a not every trade. You're hitting that on a small number of trades, and the rest of them you're getting stopped out at. So using a 3-point profit target seems to be working the best here in the last 3 months or so, and you kind of have to keep an eye on that and adjust it as the range daily changes, as the volatility ebbs and flows. So that's what we're doing. The main numbers that I'm testing based on our ranges and our volatility that we've been having over the last quarter is a 2.5-point stop and a 3-point target, and that's it. It's that simple. We're not doing any sort of trailing stops. We're not bringing anything to break even, and that's what this stuff's all about. But for a matter of using the Newton system as we always have, today would have generated you 5 points. With a trailing stop, it would have generated you 2.5. Without, it would have generated you 1 point. But over the last few days, it's proven that using that basic 2.5-point stop that I just spoke about with a 3-point target, it's been far more profitable. But we have quite a ways to go with our testing before we change anything up that's that large scale. But people want to keep being posted on how that's working, and so I think I'm going to do that for you just in case we get to a point where we do pull the plug and make the switch. All right, well, that's it for today, the 19th. Good day. Again, I've been blabbing on here about all sorts of different rules and targets we're testing, but using the regular Newton system, that's what's posted at both tradenewton.com and eminiunderground.com. Today was a 5-point winning day. Take care.